Home ownership is a dream come true for many, but it comes with its fair share of challenges. One area that leaves homeowners scratching their heads is property taxes, especially when you see those numbers on the rise. You may wonder, what's the driving force behind those changes? Join us as we unravel the complex web of factors that determine your tax bill in Needham. We'll dive into how the town decides on a tax levy and how that number changes whether you work or live in Needham. Now, get ready to look at your property taxes like never before. Imagine if everyone owned property in town chipped in for the cost of operating the community, with each property's value as the basis for its share. That's the purpose of your property taxes. And it all boils down to two critical components: the total amount of money the town needs to raise and your home's value. Let's look at the first part and demystify how the total property tax revenue is determined. To help us navigate through this complex concept, we'll rely on some essential data and documents, including the FY 2023 proposed budget and the tax classification proposal from the December 6, 2022 Select Board meeting packet. You can access these documents on the town website if you want to follow along. Moreover, we've had the opportunity to engage in a first-hand conversation with the town's finance director, Dave Davison, who offered his insight. Ready? Let's dive into the details. Each year in May, 254 elected and appointed town meeting members gather to vote on the budget for the upcoming fiscal year, which spans from July 1st to June 30th. This budget covers both government operations and funding for new infrastructure and town improvements.
Government operations is your police services, your fire services, your building inspection, it's your public works, it's your roads, it's your parks, it's certainly your policy boards, and it pays for elections. And of course, by far the greatest expense, understandably, and that's true for most every single community in Massachusetts, is public education.
Municipalities typically rely on three revenue sources: grants from federal and state agencies, local fees including charges for licenses, permits, inspections, and tickets, and the most significant player, property tax revenue.
The bottom line is what isn't covered by fees of the state is raised on the tax levy. And property taxes account for approximately 70% of all the revenues that fund government operations.
Now, what if Needham wants to rebuild all 5 elementary schools all at once? The property tax would skyrocket. It's an extreme example, of course, but before 1980, there was almost no control on property taxes in Massachusetts. That all changed when the Proposition 2.5 law was introduced by an organization called the Citizens for Limited Taxation and passed by the voters.
What they were looking for was a way to limit the growth in property tax because the amount that could be raised was significantly more and was becoming unsustainable.
Prop 2.5 placed constraints on how much a town and city can raise taxes in a year, and also repealed the school committee fiscal autonomy.
Prior to Prop 2.5, the school committee would vote its budget, whatever it is, tax collector, you have to collect that amount of money. With Prop 2.5 in the implementation, town meeting gets to decide the appropriation amount. The town meeting doesn't get to decide how the money is allocated to the school department. That's still under the control of the school committee, but town meetings now has the control of what the appropriation amount is. So that was approved in 1980 and basically had to be phased in for communities that were above this new tax limit. And there were many communities, Needham was one of them, that were above that ceiling, and they had a few years to get the taxes down below that number.
Prop 2.5 has remained the law in the Commonwealth ever since. Some people have been giving it a hard time, saying it jeopardizes essential public services. But for the purposes of this video, we'll skip that debate. Instead, we'll focus on the present-day situation where Prop 2.5 stands as the budgeting reality for towns and cities. With this law in place, towns like Needham have to start their budgeting process early, almost a year earlier. carefully considering the maximum amount they can tax.
Because if you don't, if you appropriate too much, then you don't have a balanced budget, and you need to then go back to town meeting and cut budgets. But when you recognize that, you're already several months into the year, so that makes making cuts that much more difficult.
Now let's embark on the journey to explore the enigmatic world of Prop 2.5 and the two intriguing constraints it imposes on the town: the levy ceiling and the levy limit. First up is the ceiling, the ultimate cap on property taxes a town can raise. This amount is calculated by multiplying the total value of taxable properties by 2.5%.
In FY 2023, the year that's ending on June 30th, 2023, the town's total tax levy was approximately 60% of what the levy ceiling was.
Next, we encounter the levy limit, which determines how much a town can increase their levy from year to year. The levy limit automatically climbs by 2.5% from the previous year's limit and gets an extra boost from the new developments in the community, known as new growth. Together, they establish the new levy limit for the current year. And just like a never-ending loop, the current year's levy limit becomes the starting point for the next year's calculation. But beware, even if a community decides to tax below the limit, each year's limit is still tied to the previous year's limit, not the actual tax amount. Let's break it down with an example using the FY 2023 budget. The total levy limit estimate was $166 million, consisting of three components. Firstly, we have the FY 2022 levy limit, standing at $159 million. This amount is then increased by 2.5%. And on top of that, we add $3.2 million of new growth. Even though the town did not tax up to its FY 2022 levy limit, when calculating the FY 2023 numbers, we would still use that previous year's limit and not the actual tax amount. Now let's move on to the concept of new growth. New growth represents the increased value in the town from new construction or subdivisions or return of exempt property into the local tax base since the previous year.
Not because properties increased in value because the market now says that one would purchase something at a higher price than before, but because something new was built and enlarged. Or there were changes in use of property that was adding new value. Replacing your roof, we don't get additional tax revenue for that. Replacing fixtures in your home, we don't get additional tax revenue. Adding a bedroom, adding a bathroom, installing some enhancements outside in your yard that weren't there before, those are where new growth comes into.
To calculate new growth, we take the increased value mentioned earlier and multiply it by the prior year's tax rate. Including new growth in tax revenue allows the local government to generate additional funds to cover the costs associated with providing services to the expanding community.
The reason that the new growth is allowed and added is because new properties are add extra demands on the local government. There may be demands on the public roadways. There may be additional demands on public safety. There may be additional demands in the public schools with bringing additional children.
However, it's essential to keep in mind that the new growth added during the budgeting process is just an estimated number. As we are getting ready to lay out that balanced budget for the town meeting in May, we can't forget to take into account any new growth that happens during this phase and even after the town meeting. So for the budget, we are examining all new growth that took place between July 2021 to June 2022 needs to be factored into the levy limit for FY 2023.
It is prudent to estimate on the lower side in terms of new growth because we really don't have a sense of that data and numbers until well after town meeting has already voted appropriations.
Before the select board can vote on the tax rates in December, the town must have the final number of new growth, which then needs to be certified by the State Department of Revenue. For FY 2023, the town initially estimated $3.2 million of new growth. During the tax classification hearing in December, the final new growth figure was revealed, and it was actually about $4 million.
The base levy, the 2.5% increase that was allowed, the final number for new growth of the prior year, and that tells you what your tax levy limit can grow without voter approval.
The levy limit is a crucial mechanism put in place to make sure a community doesn't go over specific tax thresholds without getting approval from the voters. But there are two exceptions: overrides and exclusions. When the majority of the voters agree in an election, an override or an exclusion allows towns to increase taxes beyond the limit. An override is designed to help towns cover additional operating costs and tackle unique financial needs like dealing with rising expenses and inflation. Once an override is approved for a specific year, it leads to a permanent increase in the levy limit because it's designed to provide funding for ongoing services.
That permanently increases the base, which then is the new base to determine the next year's 2.5% amount.
The most recent override in Needham dates back to the 2014 town election, when Needham voters approved an additional $1.5 million to fund the district's extended school day program. To present an override question during an election requires a majority vote of the select board. To place an exclusion question on the ballot requires a 2/3 vote of the board. Exclusions come in two types: debt exclusion and capital outlay expenditure exclusion. Both are temporary surcharges that allow a community to raise funds beyond its levy limit. For FY 2023, we see a total of about $13 million in debt exclusions, which were used to pay for costs related to school buildings and the public safety building.
Those purchases are not done in cash, they're done by issuing debt, and the debt is repaid over a period of years. Most often it's 20 years, sometimes it might be 10 years, sometimes it might be 25 years. It really depends on the size and scope of the project. A capital exclusion is a one-time dollar amount that's added to the levy. It's usually for an expensive piece of equipment or some other one-time capital improvement. It's all added to the tax levy this year and disappears the following year.
The most recent capital exclusion question was presented to voters during the 1996 town election. The question requested $66,000 to fund the installation of handicapped accessible restrooms in several town facilities. The request was not passed by the voters. Exclusions can be subject to adjustments, especially when the town receives money from the state to reduce costs. A common example is grants from the Massachusetts School Building Authority. Needham has successfully collaborated with the MSBA on multiple school projects, benefiting from an average reimbursement rate of 20 to 30%.
The state makes a payment for its share of the debt service. That is reflected as a reduction in the total amount.
While the levy ceiling sets the maximum amount of tax that can be raised, exclusions offer exceptions to this rule. Although it has never happened in Needham, in extreme cases of a drastic drop in property values, levying above the ceiling could be warranted.
Because market conditions could change and, let's say, property values decline, in essence, the ceiling could also decline, but the voters already approved that they were going to pay off the debt from debt exclusion. If the total amount of debt that needs to be paid in a year is above the ceiling, it is allowed to happen because the voters already said you can raise that. But that's only a temporary basis.
In October, Needham often holds a special town meeting where additional funding requests may be presented.
Some of those appropriations were known and under consideration back in the spring, but for various reasons that there was a need for additional information or decisions from external players that influence the town's operating budget, meaning the Commonwealth, the federal government, or that our own bodies, such as the Finance Committee, Select Board, School Committee, needed additional time to vet something before they could come forth to town meeting with a report and recommendation. But remember, it can't go above what's allowed under the levy limit for the coming year, nor can never exceed the levy ceiling unless it's the effect of the debt.
This underscores the importance of estimating property tax revenue within the constraints of Prop 2.5 to prevent over-appropriations. The tax levy is based on the community's budget needs, but it will always be constrained by the rules of Prop 2.5.
That's why we have to start that early estimate of what the revenue is available, because we have to ensure that we have a reliable number of what's allowed to be raised, what town meeting can vote.
In December, the town will have a final number for the tax levy, prompting the select board to decide whether to shift a portion of the residential tax burden to commercial properties.
What they're determining is, are we going to transfer some of this tax liability that would be paid from residents to the commercial sector?
Needham has been adopting the maximum allowable shift factor of 175% since 2003. Which means commercial taxpayers will pay 175% of what they would if there was a uniform residential commercial rate. For example, in FY 2023, the total tax levy is $178,882,000. And the total assessed value of all taxable properties in town is $12,248,000,000. This suggests a flat tax rate of $14.61 per $1,000 of value. With a split system, residents paid $13.04 per $1,000 of value of their home. Collectively, they paid 78% of the total tax levy, while representing 87% of the total taxable value.
In fact, the most recent year, fiscal 23, the average tax bill was 10% less than it would have been had the tax shift not been approved.
All right, is your head spinning yet? It's a lot to take in, but believe it or not, that's just half of what you need to know to get the lowdown on property taxes. You now know how the town figures out what to charge everybody, but how do they decide what to charge you? In the future segment, we'll explore how property values are assessed, shedding light on the process that determines the value of your home for tax purposes. We'll also take a look at programs that are available which might help you cut down your tax bill. We'll see you next time.